All right, hey everyone. Everyone should recognize Morgan. If you've been around FMS at all, Morgan Busby's been, I don't know, you've been with us supporting FMS from the very first one way back like 10 years ago in Vegas. Um,
Yeah, the Planet Hollywood.
yeah,
Yeah,
and
come a
you've
long
gone
way.
through and you've gone a long way since then. Uh, Way back then, you had Trading Pub,
Mhm.
and now you have this whole ecosystem that you're part of, and you're partnered with VNR and yeah, Financial Media Corp. And you have a bunch of different publishers. So like it's been a bit of a journey,
Yeah, yeah, you could say that. So,
and probably the most stressful part of that journey was in the last 4 years.
yeah, without a doubt. Really last, I'd say two, I guess 2 to 3.
Yeah.
Everyone had the COVID experience, which was interesting because when it first happened, I don't know if you remember this, everyone just talks about like, the COVID boom in the business. But for that, first, I guess it was like maybe February, the start of February, right when people started realizing like it was like right when it hit New York. And
Mhm.
so it was like, oh, we're starting to have shutdowns and close cities or close government services where the market was just like tanking every day. And I think the bottom was like the Bill Ackman day, when he's
Mhm.
like, all hell's breaking loose or whatever. And then like the sub tickers like Ackman buys Hilton Hotel by, and like all the stocks he's buying that day. But that was it. He was talking about how COVID was going to be a much bigger thing than like everyone was thinking about. And obviously he played it probably like investment wise better than anyone of buying the right things at the right time.
Mhm.
But we went through a period in our business where it's like sales just totally dried up. I remember, the markets would be down like, 3%, 4%. And the only thing we did, we just said, hey, let's try to like open up a trade room, like open up live trade room for all of our customers to talk through it and try to, just be, at least be talking to them.
Mhm.
And we saw a huge spike in refunds of people that, would say, hey, I just lost my job. I need, and of course, in that situation, you just give people their money back regardless of the policy. But we actually made a couple of, like, I remember sitting down with our CFO and like making distinct plans. We had like one plan, which would just be initial, cuts. The second plan, which would be like, let's cut anything that's not, we had at that time, we had all these like projects and we're going to go into this area and all this stuff that you try and try to think like very broadly, which some ended up being okay, some weren't, but we looked at it, we're like, if it's not going to make us money in the next 6 months, we'll cut that. And then we even had like a third plan where it was like, hey, who can stay here to keep the lights on, like a 8 to 10 person core of people that would just take massive salary cuts and then
Mhm.
build the business back up. So it was like that was our thought process at the beginning. And then I guess after a couple weeks and some of the government stimulus and things, that the market started rallying and ended up to be the biggest boom, and probably the biggest boom in FinPub,
Ever.
say, like,
Easily. Yeah.
history. Yeah. So it was a bizarre time.
Yeah, I mean, and I want to go back before that, but just like that, I mean, you had like that weird dynamic of all with COVID shutting down all live events, all the sporting stuff stopped, and then all the people who were sports betting turned out were also like overlapping with the trading market, and they were coming online to find something to do. It seemed like, and we had this
Yeah.
big bump, but I think that there was a structural change there because you can watch like the market activity in retail investors and COVID like they came in and like with historic amounts of trading volume from retail, and that's just never gone away. Like so
Yeah.
it was like a fundamental shift.
Well, and,
Um,
the other thing, not just the attention, but there was a period in time where Google ads were extremely cheap. And it's like you had all the travel companies, anyone branding, that just pulled their ad budget. And I remember, Nate, like Nate who works
mhm.
with us, who had never really run Google ads, before. He had an ad up for one of our products. And I remember him like distinctly calling me and saying, hey, I think we'll spend $30,000 today, like on this one ad. Is that okay? And it's like, yeah, I get, it's backing out. But it was a weird period. We were like paying our credit card off. It was almost like a prepaid debit card, based on like because they also cut all the limits, like the credit card
Right.
companies were like, hey, we're getting rid of risk. So we would be paying our credit card off like every 2 days, and it was a wild time.
Yeah. Yeah, that was, I mean, it was you're right. There was that period of like everyone's kind of holding the rails and like this is going to be bad. Um, and then it turned out it was this amazing boom. But before that, because I want to talk through like kind of how I feel like your journey in FinPub, because you've had both the advertising side and the subscription publishing side and the trader education side all in one. Like you had this really cool journey that really reflects a lot of these trends all the way through the entire last 10 years of the business or more actually. So let's walk back to like you had Trading Pub, right?
Right.
You want to tell everyone what was that business and then what's this progression that you
Yeah,
took?
so in 2011, I actually tried to do two things. One, I had my brokerage license. I had a Series 7, a Series 24. We had like a branch office of a broker dealer, and the idea was to create another like an online trading platform. And we actually had a white label to Thinkorswim's platform that we could open up direct accounts called, it was on called ThinkPipes, which was like their institutional platform, which was pretty cool because we got like really good pricing and had some growth. It was profitable and doing well. Then when Thinkorswim sold to TD Ameritrade, they said, "Hey, we're going to get rid of this, white label and just use it for RIAs." So that pretty much put that whole idea out of business just overnight.
Mhm.
And but at the same time, I'd started this blog on the side with the idea of like, hey, it'd be cool. I'd had the opportunity. My dad had an educational firm, and so I'd met people going to like traders expos or money shows, and thought like it'd be cool to have like an online version of just free education, and eventually maybe figure out how to monetize it. And so we would have webinars where I would host the webinars and just have two or three speakers come on, give a really good like free educational session, then at the end have maybe make an offer at the end or a opt-in. And when it started, I think our first 6 months we did like $1,600, in revenue, but just thought like, hey, if I can build an audience, eventually, figure out a way to monetize it. And I look back now on those like the stats of those webinars, you'd have, 50 or 60% of the people who registered would show up. We had webinars, some of them with like 2 or 3 thousand people in the room, and now like the effort it takes to get that number of people in the room is like crazy. No, like what it's like if I had known then what I know now, would have been crazy. But yeah, so it grew. We made money through our first big sponsorship was actually with Nadex Exchange, which was a binary option exchange that had gotten registered. There were a lot of offshore, binary option exchanges,
Mhm.
but the U.S. regulated one was Nadex, and they liked our webinars. So we would do these educational webinars on their products and try to bring awareness. And one thing I always did was just I'd take pretty much anything I made on that and just reinvest it in lead gen and
Mhm.
trying to, just thought like I'll just have a bigger audience or a bigger audience. And so that was what sort of like started the trading pub model. And then we eventually merged with FinMC, which was that was like a monetization component of sending out paid offers. And yeah, and then I think that was 2014 that we did that deal, which was right around the time that FMS got started.
Yeah, I think we started in 13 and like that next year you did that deal. Um, yeah. And so then like that's where I always thought of like that business kind of growing, as FMS grew, not like directly related to it, but like just in parallel, like
Yeah.
every year you'd show up and there'd be more things happening and more things happening.
Hmm.
Um, and uh and so like you went with like for a while there, I remember like Financial Media Corp and MC was, you were like the that business was very innovative in terms of like being the first ones really to bring the one click opt-ins to the industry, and things like that. There was all these like kind of technical stuff that you guys brought in, that became kind of like standard across the industry over the next several years. But like a lot of that innovation happened, at FitMC, and then you ended up, buying your partners out and adding a whole publishing empire there too, right?
Yeah. Yeah. And it's interesting back when we were doing a lot of innovation with FinMC, I had two partners, James and then also Bob, who a lot of people didn't know Bob, but he was really the tech side of the partnership.
Mm-hmm.
And I think one of the most valuable things in the world. Like there's a lot of people have like, you know, tech knowledge or you know, call it IT knowledge, whatever. It's like your way of showing that you don't know anything about tech when you call it IT. But having that like more of a software mind or technical, you know, a technical mind, the people that have that plus understand the marketing business, I think have just an enormous advantage over everyone else. Where like, you know, like I'm not strong technically, so any idea I have, you know, I have to then take and, you know, go
Hmm.
through someone who is technical, you know, or like I don't see all the things that probably like the best example you see in our space is with Matt, you know, Matt Paulson
Absolutely. Yeah.
and what he's been able to do, and even like George and Charles both, you know, like fit into that category. So it's a huge advantage. Like if you're technically minded, I would say if you can spend a lot of your time trying to learn the marketing side, and a lot of times that doesn't fit, you know, like people who are technical or and vice versa. But if you can really work to learn that, can become extremely, you know, extremely valuable.
Yeah. Yeah, absolutely. And that's one of those things where it's almost like on the you know, on the traffic side, like your competition now would be like people like who can do all this technical stuff. It's very difficult to compete with people who, like, I mean, Market Beat Matt Paulson's in a phenomenal job. Um, and like you said, George and Flagle,
Mhm.
like they're some of the biggest traffic drivers in the industry.
Right.
And that
Yeah.
tech piece is a big piece of it. And so then from there, like you make the decision. You have essentially what is a vertical ad network in, you know, in FinPub, trading education and retail investors. And then you make the decision like, hey, we're going to actually try and launch um, publishing businesses and sell subscriptions. And so like that was another like, you know, fundamental shift
Yeah.
in kind of what you were doing.
Yeah. Yeah. And it kind of came about organically. You know, a lot of times when you're in the traffic business, a lot of people there, you know, some people will buy traffic, you know, just like, hey, I'll buy it, straight numbers. Here's the, you know, here's the cash. If it hits this, I'll scale. If I hit, you know, like, and usually it's more of the kind of like deeper pocketed advertisers that have the ability to go in the hole a little bit on you know, like they don't have to make back their money day one. Then you've got other people who say, hey, you know, I'll do affiliate stuff, which affiliate's great. Like, because if it's converting really well, there's no real cap on it. You know, it's a great value for the business if they price their, you know, their payout or CPA correctly. And so we'd always get approached by, you know, people, hey, we do this affiliate deal, we do this, and we were able back then to negotiate some pretty good deals. Like we would have uh, like long-term cookies. We had a few that we did. We actually had lifetime cookies on, which eventually they expire, you know.
Yeah.
You know, I don't have any checks still coming in from those lifetime cookie deals, but again, you know, when you have the power to send, like you can get better, you know, just get better deals with it. And so we started to do some of those where then we said, hey, if we have this strong affiliate deal, we'll actually go out and buy traffic, you know, build it for our list and use that as, you know, a way to offset our ad costs. And that just sort of organically flowed into the idea of doing, you know, a publishing partnership. And so we did some where we tried launching our own product. We had some partnerships that came about where we said, you know, like would kind of say, hey, there's three options. A, we can be an affiliate, you know, or like a super affiliate if you give us really strong terms, or C, we'll actually partner and kind of we'll just be the traffic side and you guys run the business. And so that's sort of what launched us into this publishing mindset. And the whole idea behind it was we were sold out every month of in advertising. And it's like, hey, if someone's, you know, pick a price, but say someone's paying you $5 a lead or $6 a lead and they do it month after month, it means it's worth more than, you know, $5 or $6 a lead. So it's like obviously there's the opportunity there to you know, to increase, you know, increase the revenue of the client.
Mhm. Yeah. Yeah. And so then you had, you know, um, Wealth Press, DTI, um, and other businesses. And then, you know, then you had, again, like your journey mirroring so much in the industry, right? Then you have when the FTC came in, you guys had that fun experience as well with one of the publishing businesses,
Yep.
um, which was not fun. Uh, and yeah, I guess how did that change everything for you guys? Just
Yeah. So,
because, yeah,
so obviously, and we were set up in a way, I think when you look back and kind of like when I talked about the COVID plan of like, are like, hey, maybe we should shut down this initiative. Maybe we should shut down, this initiative. And I gave a talk recently at another marketing event, kind of on the topic of like the difference in making money and building wealth, like with your business. And the thing to think about, like you go through your bio slide, and it's like, hey, here's my bio slide. I started this business, and then we did this and this, and this happened. And then I did a secondary bio that's like, here's the bio that, usually don't promote. And it's like all the bad ideas I had, things we tried to launch that we didn't fail, or things that we launched and, maybe did mediocre, but then, it was set up as a bad deal, or it was,
Mhm.
this and that. And it's a realization, I think, as you grow in business to just sort of like focus more on the things that work instead of trying to go so wide, with all the ideas, which is tough for me because like I'll get excited about, you know, tell me any dumb idea and I'll start thinking about like I'm like very optimistic and always look at the bright side or like, oh, that could work this way and this way and this way. And then, it's like if I sleep on it for a week, I'm like, yeah, it's really not the best idea. But I'd say we got too far expanded with like a lot of the partnerships and deals, that we did. And when it was interesting when the FTC at Wealth Press happened, it was also a time where it was like post peak of the industry. I think
Mhm.
when I feel like when Agora had an FTC thing, when that happened, it was sort of like still the way up. Raging Bulls was still the way up. When Wealth Press got its letter, it was sort of like there were cracks in in FinPub, the market was starting to be a little soft, and you were seeing companies that had peaked, and it's sort of like, wow, we've added all this like, post-COVID expenses and bloated payrolls and all these
Mhm.
deals and everything. And so for us, it was really tough because the first thing that happens when an FTC notice comes is you say, hey, like obviously we want to be compliant. So what do we need to do? You don't really know exactly what it is. It's like very vague, like, hey, just send us everything you've ever done. And so the first advice of, kind of the attorneys is like, let's take anything down, that hasn't been like fully reviewed by an attorney, by like, with like a fine tooth comb or whatever. So it's like you take all your promos down and immediately revenue goes to zero, like
Right.
and it's like you don't take everything down and let your whole team go. You just take everything down and think, okay, hey, we'll go through this, get this back up or whatever. So it was a really trying process to it was like difficult market times. B, we were also going through a the merger with VNR. So those discussions started, I think, in March of 2021. So we had been, I guess, probably like 6 to 8 months into that. We were about to close about the time that Wealth Press got the letter. So that was interesting, to like go through and see, hey, are we still going to close this deal? Are we not? Or, what are we going to do? And so it's like all of that at once, which was a pretty stressful time. Thankfully, we were able to kind of, to push through it on both fronts. We had a rough year. I think we lost money maybe like 18 months in a row, from that point,
Mhm.
which is just a brutal stretch to come into the business and just thinking like, I'm working more than I've ever worked, and I'm basically like writing a check to be here. But we had a really solid team like that stayed, kind of like our whole core leadership group stayed, which is an interesting thing. We did have a lot of people leave. Some people left voluntarily, some people left as part of layoffs, which so it can be very sympathetic to like other groups that are going through that. Like it's a brutal, obviously it's like the worst for the employee, that's going through it, but it's also brutal as a business owner. You develop relationships, you get to know people, their friends, their families, and so it's really like a trying time to kind of, to go through that. And yeah, so we went about like 18 months of that. I talked a little bit about some of the things we did at the FMS talk, like to
Mhm.
turn the business around that I think was healthy. It was like a healthy cleansing process to go through and thankfully come out the other side of it. But I think one of the interesting things that was through that whole part with like FinPub as a whole being in a bear market and tough time, like it wasn't like we were the only ones struggling, everyone else was having
Yeah.
these, it was like a tough environment. So not to say like you want other people to suffer, but at least like I felt like, hey, it's not just like we're just not a horribly run
Right.
company. Like we're just struggling in a difficult macro environment.
Yeah, and timing, I feel like there's a lot of publishers that had just before that market turn, like new pubs started
Mhm.
and they were doing well, or they as well as they could, and then as things deteriorated, they were like, I'm saying this is the worst time in the history of FinPub to have started a pub.
Yeah.
And they go down, and like, I think of some of the deals like, with Rogue, and like their editor died,
Mhm.
passed away, unfortunately. Like, terrible thing happened there in the same time when all this is happening. You're like, man, like trying to run up a hill that like keeps crashing down on you is so hard for an existing business, and then for the startups, you're just like, this was just some of the worst timing.
Yeah.
um,
Yeah. I think it's different challenges. Like I know during that time I'd look at things and think like, oh, how great would it have been to just started our business, and only have this or whatever. But it's like you're always kind of looking at, the grass is always greener or whatever. But
yeah.
yeah, I'm also, I think looking back, as like cliche as it sounds, like very grateful, for it, to go through it. It changed my perspective on a lot of things. I think changed probably my perspective on, on taking different risk, on how to structure, partnerships, how to like even just discussions to have, going into a deal with someone of so obviously, and I think, in the next 10, 15, 20 years, like will probably be things that'll be extremely, extremely valuable. Uh,
Mhm.
as a
Well, like, what are some of those changes in perspective then, specifically in terms of like pre-deal, what discussions to have?
Yeah, so I mean, one thing that's easy, it's like when things in our business, even though we had like a couple of blips, like we were pretty much on a straight line up, like I said, like from 1,600 in revenue, it was like we grew every year was bigger than the last. Every year also I never really like took a ton of money home. Like I always tried to like reinvest, like we did these acquisitions or we did bought, like bought more traffic or brought on a higher team or like tried, just kept trying to like build and get to the next level, get to the next level. And then when like the bottom goes out, you kind of look back, you're like, gosh, I wasted so much money on so many things that like would be great to have right now to really kind of like come in and solidify things or, so I think of thinking through like new verticals or new ventures, ahead of time. And where we funded a lot of them out of cash flow, like a lot of them would be like, okay, hey, let's say that we're going to commit $1 million to some new idea or whatever. Like, okay, well, over the next 2 years, that's this much thousand per month, as opposed to saying, hey, here's $1 million. This is it. If it's gone,
Mhm.
and so you put yourself in this position where you can always, especially as like an optimistic person, always talk yourself into holding on to it instead of just saying, hey, just, it didn't work, hadn't hit the metrics, whatever. Another thing that is big when you start losing money comes into capital contributions, with
Mhm.
any partnership. And just I think being upfront about like, hey, what do we, how do I view it? How do you view it? What is kind of, and everybody has their own limits, right? Like it's like, there's and that was a discussion we actually had, with VNR was like, hey, what is my limit and what is your, their limit's obviously much higher than what I'm personally able to do. And so like having that is just a very like frank discussion early on. But
Mhm.
those are difficult things to have when it's like, when it feels like your plane's going down and
Right.
everyone's super stressful. But we had had a lot of good partnerships that everybody for the most part of a very difficult situation, kind of put their best foot forward in every regard that I'm really, really thankful for. I think a lot of that's like just with, building good relationships over the years. And I think FMS is a big part of that, bringing everyone together. And if I look back at like Trading Pub in the early days, that was probably, it wasn't always that way where like everyone was like super open of sharing like earlier today, or I guess it was Friday, Matt shared like, hey, here's the top 10 affiliate offers that we have right now.
Yeah.
Like which again is not an out of the ordinary thing, but years ago, you would probably have like, I'm not sharing that. Like those are my, like those are my people. So I think having like a very like open, collaborative thought process has been good for, it's been good for our business and also for the industry as a whole.
Yeah, no, definitely, definitely. And how do you see then like with everything that's happened, you're probably one of the best people to kind of, you've seen so much and experienced so many of the different dynamics that have affected the industry as a whole. where do you see things going right now? Where do you see like the industry in terms of like where are the opportunities in the business? Because I think it's changed quite a bit over the last several years, and like just the market's grown a lot in terms
Yeah.
of the customer size. I think that easy growth is gone in the sense of like, okay, we have kind of the size of the market in terms of like online retail investing folks looking for information. That will, there'll be some growth in there in terms of I think more adoption in the millennials as they get older. But I think that the market, we've had this huge boom market um, of an increase in total number of investors for the last 20 years.
Yeah.
Um,
Yeah, I think there's going to continue to be like, I don't have like a bold proclamation to be like email is dead, macro's dead, everyone's traders or everyone's, this or that or crypto. I think for the most part though, there's going to be the opportunity for like several different like niche areas to be successful and to grow where it's like, oh, there's probably a small publishing company right now. It's maybe doing $500,000 to $1 million, bucks a month that could be a 15 to 20 or 20 to $30 million publisher just focusing on
mhm,
one aspect of trading or just focusing on, a gold macro letter that because I think the market is a lot bigger in that sense. And also you've seen with a lot of what happened with Agora, which I think reached what like over 1 billion, and at the peak,
yeah.
the peak of it all. And you've talked a lot about this, about kind of the talent dispersion of of that. And so it's still looking at it like they have, several divisions still doing very well. Like
Mhm.
I think like everyone else, it's like if your promos are good. And I talked to someone in the past week who was previously at one of the MarketWise companies, and we're talking about some of the challenges that they were facing, and but at the same time, he's like, at the end of the day, there's still one promo away. Like
Right.
from it's like they have the money to do it, they have the team to do it. If you have that one promo, it's like such a hits based business
Hmm.
that if you can, keep a core there, and that was really our fear, or the thing that we guarded against when we went through like layoffs and went through difficult decisions was, we're like, there comes a certain point where you cut beyond coming back. Like we have
Hmm.
to keep a certain amount of this. And so once we sort of went through all that and we started to see just a little bit of success, we really tried to hammer the lead gen and just said like, hey, like we're just going to close our eyes and buy traffic, because
Right.
if we don't do that, then like we do have the hit launch and we don't have people there to watch it. And so I think that's the interesting thing about these businesses where it's like, you could look at a business and say, oh, they used to be at this and now they're only at this, but really you know, they're one hit away from getting the train going again. So
Yeah.
it's a good and bad thing, with the volatility.
Yeah, and I think that piece of like the volatility side of promo and acquisition is definitely something that a lot of people coming into the space aren't familiar with. Um, that there is like, there have been promos, and it's happened. It doesn't happen as regularly as we would all like, but it happens enough where there's a promo that you see somebody bring in 200,000 customers
Right.
in a year, right? And you're like, holy crap, that's an amazing. And it's happened so often that it's out there,
Mhm.
right?
Yeah.
It's just you can never predict when they're going to hit. Um, and so like, yeah, things can come back. I think structurally businesses are different, and there's different goals. Like you know, there was a period of time when, uh, the idea of Gore being 1.3 billion or whatever it was in subscription sales was like, this is just the new normal for them. But then there was always a voice, I think it was Mark Ford, always like, it's the right size business. And so the question there has become, what is the right size of a publishing business? And is
Yeah.
having so many $200 to $300 million publishing franchises the right model or not?
Yeah.
Um,
Yeah. And it's a tough question. I think it's easy to answer philosophically.
yeah.
And I think I've got a number in mind that I think works, that is good. But I think the hard part is then you get to that number and you have a working offer and you have a team that's motivated, like the people that are going to get you to a number like that aren't aren't the type of people that once you get to a number like that are going to say, okay, hey, I'm happy with, happy with where we are. And another person I talked to that was kind of helped lead Agora during that boom time. And I want to say his name just in case he doesn't want it public, but he's said before, like, I would never sell over this many, like I would never have a promo go over this many customers, like this many tens of thousands like I would just cut it off. I remember asking him and so, well, how do you tell, tell your editor that? How do you tell your copy team or your media team? He's like, honestly, I'd pay him double and just shut it down. He's like, it's not worth the headache and all that. And it's not in the sense that like anything changes between 10,000 customers, 20,000, 30, like it's like the product's still the same, the copy's still the same, your compliance is still the same. It just opens up, a lot more, like customer service issues and having to hire and build up your team, and it's like each step you get removed makes it a little more difficult. And then when you have a downturn, it puts you in in kind of like a weighted situation where we're like, when we turned our business around, if we were a much smaller team, if we had been at 50 people, as a team at the time and had to like, we probably could have turned it around much faster, than with where we are. Cause it's like so many more steps and planning and things that you have to do once you reach a certain number of subscribers.
Yeah. Yeah. And I do think that, like, to your point before about opportunities for small groups to hit maybe 15, 20, $30 million and really focus in on a subset of the market. I do think that that's one of the things that probably people should be looking at now, is that there are, like I said, much bigger customer segments. I mean, there's whole different like competitive categories now in FinPub, from like kind of the investment newsletter to trader education to kind of the community models of Discord groups and things like that, to all and everything in between, that are large enough segments
Right.
that people can build a position in that category. That is, I think, in a way, it makes them kind of like, there'll be volatility because as that category goes up and down, especially if it's sector specific, you'll have more, but like there can be some more stability in kind of the core business, because you can build, like let me phrase it this way: when the industry was growing as a whole, it's much easier to keep a high churn model, right? Where it's like, we're just going to put stuff out the door. The product might not be as good as the promo, but there's always more customers. And then as people start to build out positions and take more and more spaces, then like the goal would be to get to lower churn models where like, no, like this is the guy for this.
Right.
And I love him and I'm going to stick with him. And so that can build that renewal revenue becomes more important.
Yeah. And I think that's a key of looking at it's like the formula is almost like less customers, higher LTV, And again, that's not like groundbreaking. I think like anyone would be like, well, duh. Like, but I think in this model, there's still people that are, if they're really excited about it, like they're happy to buy a new product or buy your additional, additional product. And that was one thing with when we sort of worked on turning the business around. Probably one of the easiest levers we pulled was just raising the prices, like of getting away from $9.97 to going to $19.97, or going from $19.97 to $29.97. And obviously there's a certain point there that makes sense. But if the value, if the value to the consumer is good enough, and you see refund rates go down, which means customers are happier, generally speaking. And so it's like one of those levers that I think you're always a little bit afraid to pull, just because it's like, oh, it's a big jump. But if the, product's good enough, it'll end up working out. And that changes changes the margins and changes the difference of maybe an offer that wouldn't work that then does work. And it's like it filters down to every aspect of the business.
Yeah. Yeah. And so now you guys have, I mean, how many different groups do you kind of have running like separate franchises?
So everything's now under with kind of like one group. We used to have a lot of these external partnerships, and those have either been spun off, spun off or consolidated, wholly internally. But we've got 8 different editors. We've got 2 new ones that are starting. one that's an editor who's been in the industry for a while, and one that actually was a student of or a subscriber, of one of our current editors, which those are always really powerful, powerful stories where you have someone that came in, bought the product, used the product, had real success, with a strong audited track record, and then has the ability to be able to talk, to talk about it. Just comes off as a very authentic, experience. And so we'll have hopefully have 10, by the end of the year. And I'd say we've kind of diversified in that sense of just having like multiple offers. Like the way we do promotions now, it's very like market catalyst driven. And that's one thing I think that's a bit of a misnomer is, some people are like, oh, it's either a macro idea or it's a trading idea. And what we found the most powerful thing on the trading side is actually having some type of macro idea tied to it, to have a catalyst. If we just do a trading promo that's around, like a traditional systems promo, compare that to a webinar that has, something that's big macro, environment going into that, we'll see such better engagement on that like macro based catalyst. And but the ability of doing that, like we do a lot of like webinar decks instead of full, VSL promos. That was another change we made, like when we went through all the transition, is, it was like so cost intensive to, have a copywriter write, this huge script, and then, it goes through compliance. Then you set a film date, you go film it, you wait 3 more weeks. It's like the markets are so dynamic.
Yeah.
By the time you have your, your crypto promo ready, crypto's back in the gutter and nobody cares, or vice versa, or it doesn't work. And it's like you spent all this time. So we really went to much more of a, like, let's go very like, kind of catalyst driven trading idea, run the webinar on it, get the deck turned around. And so we've taken the process where it used to be, it was just like, and maybe it's like something that copywriters decided, years ago, we're like, hey, one promo every 2 months, that's our our limit of having our copy team really being able to churn out a significant amount of promotions, month after month or within a couple weeks, and then updating and tweaking. So it's it's one of those things. I think it works for our business. It might not work for for our business. And I think that's one of the things that you learn over time is like there's no one way to do this business. Like there's successful macro franchises at Agora that just have the traditional VSL. There's trading education firms. There's the Discord guy that none of us know about. That's probably the best year ever. And so it's just really finding like what works with your model and your strength and being able to play to that.
Yeah. I think that's very true. I think there's like the number of offers out the door is one of those core metrics. I think that like nothing else, if you don't know anything else, number of offers out the door, like, is one of those things that like makes a huge difference on the business. And then like the kind of just different approaches anymore. Like one of like it's one of like to me it's like the double-edged sword of FMS, right? Like, is that, hey, we highlight what's successful, what's working as a kind of an educational piece, and then like everyone's like, oh well, I should do that,
right?
And it's like, no,
Yeah.
wait, you should understand that doesn't necessarily mean you should do that. And that's a harder thing to to talk to people about. Like, you can't sustain if you're a one man shop doing a front end Substack newsletter, and you want to do the lifetime back ends of MarketWise and Agora. It's not so easy, because like the whole point of doing that is to move cash forward to invest in acquisition. And if you're not doing paid acquisition, you don't have the same product mix, the same teams, the same anything.
Right. And same with the value. Like if you're one person, you have one product or two products, it's hard to justify a large bundled price. When someone's like, well, if I subscribe to everything, it costs me $2,000 a year. So why would I pay 5, 10, 15, 20, where it's like, if you have a ton of products, then it's a lot easier for the consumer to understand, like, okay, I'm going to buy all these. It's going to cost me this. So I'll just, do a bundle. And so it's the advantages, disadvantages. Like, if you're small, you can move quickly, you can try new ideas, you can test things, you can also probably test things cheaply, like it's difficult. And there's ideas we have now that like we look at and we're like, God, it could work, but like it might not be worth the effort to really, you know, to test it or do it. And so it's like you miss out on some of those things as well.
Yeah. So how do you think then, you mentioned earlier, we didn't get to it, that this whole last few years has changed like your perspective on risk and taking risks. And is that what you mean right there? Is that it's
Yeah,
um
a lot on like your timeshare and things that I would, not get involved in risk in the sense it's like, hey, we'll do it because it will make money if it's not a good thing or whatever. Not in that regard, but just more of like spreading ourselves too thin. And again, that's something I think that you've seen Matt do a good job of staying focused. And he'll post every now and then someone's like, oh, hey, you should be a publishing company. Why don't you do
mhm,
that? And he's like, oh, it's not what we do. And obviously
right.
he's thought about it. Like I'm sure he's gone down the rabbit hole of like what it would take and do this and that. And maybe one day he does it or one day he doesn't. But like he's had that singular focus of I'm gonna grow market beat and
Mhm.
do a really good job with that. And so I think that's been um kind of the main thing of just saying like, hey, I want to like I've only got a certain amount of time and focus and capital, and this is what I want to, put my efforts into.
Yeah. And but you do have like, so you had a like almost like a very loosely expanding ecosystem, and now you consolidated it back into a tighter kind of functional space. But because you have enough of an ecosystem there, in terms of the number of products and editors and franchises, or the customer comes in, it seems like you have, like, on an LTV basis or a churn basis, like somebody comes in the door, they're you can monetize them better than if you still just had, like, one or two guys, right?
Oh, yeah. Yeah, absolutely. It's a big so for example, and I'll just share some numbers. When we run external advertising, we do a lot of lead gen to like a webinar. So that's sort of our whole we've got a few like front ends, but they're mostly tripwire, like $5 cheat sheet type thing. But for the most part, most of our advertising goes through a lead gen. It's lead gen to a webinar, and we might make back, you know, 30%. We call it funnel ROI, which is just like
Mm-hmm.
day zero revenue. So, which obviously you do the math of that, it's like we're losing 70%, from day zero. If another dollar doesn't come in, we've lost, 70% of whatever we spent on the ads. But I think because we have enough products established that we'll see people and because we do lead gen, that's another thing. A lot of publishers will just do, like VSL to buyer, like they're just trying to get the buyers. They just care about buyers coming into their file. And so we'll see people who come in the free side that don't buy, that then they buy something later. We'll see people who buy, then go on to buy other products. So we're able to scale lead gen based on that at that like 30% rate.
Mm-hmm.
We'll have some offers that might be 80% or 100%. Like those are obviously the ones we try to spend as much as possible. But we've really gone out with just much more of a, hey, we know, you know, these traffic sources work long term. If we can hit a minimum baseline, we'll almost take as much as much as we can get. And the more offers we have, the easier it is to
Mm-hmm.
do that. Because, with like an email list, maybe we could spend 50 grand off one offer, but if we have 10 offers, we can spend 2 to 3 times that.
Right.
So it's been a benefit of having like all those offers going. So even if we have a suboptimal offer, we'll still run traffic to it just because we have faith or trust that knowing it's the right type of lead will work out to the ecosystem. And I think the other thing that's a big change, and this is something that someone at MarketWise had shared with me, is they didn't put a lot of and this was a couple years ago, didn't put a lot of faith into dupes. So like you work with some affiliate, and I know a lot of this from the media side. Back when we'd work with people, some people would be like, oh, I don't want any dupes or use the suppression file, and other people were more or less loose with it. And
Mm-hmm.
I think we've kind of taken the mindset of, it's like so many of these people are on so many different lists. It's like they're not just your customer. Uh, you know, they're also on, XYZ trading lists, and they bought products from this person. It's like buyers tend to buy. And so having that understanding is like, look, if we buy them on this list and then we buy them on this other offer later that month, like it's not that big a deal. All it shows is that they were, they're
Mhm.
interested in our stuff. I think if we tried to, my guess would be if we tried to like utilize a suppression file, it would really hurt our business. It'd cut our lead budget down significantly, but I think it cut our revenue down
Yeah.
because people, are so less engaged now. Like when I mentioned the trading pub numbers early on, we'd have 50 or 60% of the people show up in a webinar. Now you might have 10%,
Right.
show up rate. So it's like there's just so much stuff that people are inundated with that it's hard to get that attention.
Yeah, and I think it's so interesting. Like you actually shared this with me. This was I don't know 5 years ago. We were talking about lists, and you had a list where you were saying that um, the same email address on the same list or on multiple lists getting the same promo, but of all the lists that they're on, they would only buy from one of them, maybe.
Mhm.
Right? So they're getting the emails. They maybe even open them over here, but for whatever reason, this one list is the one where they buy from. They don't buy from over here. They buy from this list.
Yeah.
And so it's the same dude on different things. And my thought was that whatever list that is could change over time,
Mhm.
right? So maybe it switches to somebody else's list.
Right.
He's buying there for this year. He's buying over there, and
Yeah.
so um, you have the email address, but you don't necessarily have the attention all the time.
Yeah. Yeah. It's like the mind share, like, do you have the mind share? And then that goes back to your content quality. It also goes back to the tech side, email deliverability,
Mhm.
understanding what, and this has been a discussion in the like FMS Pro channel, like how much is too much, like, hey, if we send an email, we make money. Well, if you send 2 emails, you make twice as much money. If you send three, at what point, at what point is that tipping point where it's not ideal for the customer?
Mhm.
One of the areas too we've been focusing on is like thinking like what are different communication channels or networks that can be, positive to have that, like to get out of the email clutter or whatever to be able to talk to consumers. And then like the level of content. So it's like we might advertise more in email than we would on SMS, where SMS is more content based, or might, like just
Mhm.
different channels that we use where it's like, hey, this might be like 95% content and 5%, advertisement. We see when we look at like room sizes, even on an editor basis internally, like with our group, we've got some editors who are like very active with content they put out, throughout the day.
Mhm.
And they'll have a higher show up rate when they do a webinar than someone that just does the once a week, or 3 times a week e-letter. So it's an interesting, like, I mean, it's totally true. I don't have the exact numbers. I can
Right.
just get from like knowing the difference of show up rates on, and I'm sure we could figure it out, but it wouldn't really prove anything other than just, hey, put out better content,
Right.
and engage with your customers more. So it's an interesting facet, like to think through. Those are like all the little things down the road that then make a difference
Yeah.
of one guy having a launch that's, 2 times bigger than the other person because he engages his customers, for the past 2 or 3 months.
Right. Yeah. I think that's counterintuitive to a lot of people that more communication can be better than less.
Yeah.
It's like, yeah. So what else? So what else? I mean, what am I not thinking about here that like you think is important in the industry right now? Um, you
Yeah.
know.
I think honestly, a big thing is just the shots on goal, like and the whole like good versus great, like arguments of things. And that's worked for us where it's like, let's just try to get stuff out, get stuff, like get some feedback rather than like trying to make it, completely from, and this is more from like a copy, like a copy standpoint.
Mhm.
I think like, uh 80% promo that goes out today could be more valuable than 100% promo that goes out 2 months from now, just because of all the changes in the market. And
Mhm.
you can always go back. It's like if an 80% promo works, you can always go back and tweak it and relead it and, and spend time on it. But so I think that like the quicker you can get something out to get customer feedback, the better chance of success, you're going to have, which is a hard thing to do with,
Yeah.
with some people. Cause it's like, no, this isn't the way I want it. But it's like, that might not move the needle anymore. And I think as people's attention spans change, it maybe even becomes even more important, to that it's like, they won't pay attention that long or
Mhm.
but
It's so weird. Like to me, like how the amount, I think this is part of the amount of content that I consume, that something that I was interested in last week, if I didn't do anything else with it, and it pops up again, sometimes it's like, oh, that was so long ago.
Mhm.
And
Yeah.
it would, like, years ago, it'd have been like that last week is fresh in my mind, but now it feels like, oh, that's so long ago.
Yeah.
Um,
Yeah. There's so much out, you know, with books and podcasts and that's another thing. It's like, oh, we should start a podcast, you know, or we should start it's
mm,
like we want to do everything, but it's like let's just focus on things we can be, you know, be impactful and concentrate our efforts there.
yeah, yeah, no, definitely. Mission creep is it's
Yeah.
definitely easy to happen in content. So that's awesome, Morgan. Well, I appreciate it. I'm glad to get you on here. We could dive into all kinds of little things, but maybe another time. Like your view and going to the intricacies of partnering with people would be awesome because I know you've done so much and so much
Yeah.
experience there, but that would be a whole other conversation. So
Yeah, I think just a real quick on that, like the best thing to do is just think through, you know, like just think through any scenario that like business scenario that could come up, like everything from how fast you want to scale, how big you want to get, how much you want to put into it if the idea doesn't work,
mhm,
and put that also like down on paper, like is and it's not like a lack of trust, but I think there's everyone has their own perception, you know, like even when you have a conversation, like I think
yeah,
everybody in business has dealt with this where it's like, oh, that's not what we talked about. It's like, no, it's what I had in my head that, you
yeah,
know, you had a different thing. And so I think it can just make it a lot, you know, a lot smoother process of and that's like if you're an employee, you're talking about a bonus or you're talking about a goal or anything like that. Like I would just say, hey, just as a follow-up, this is what we're, you know, like 3 or 4 bullets, this is what we're agreeing on, right? And then
mhm,
you know, then it's so much easier to solve or would replace a lot of, you know, a lot of conflict and the, you know, potential conflict in the future of working through that.
yeah, yeah. That makes total sense. So awesome. Well, thanks, Morgan. We will if anyone, we are in FMS season in terms of like, we're only a few months away at this point, and Morgan, you've sponsored and been a major part of FMS since the very beginning, which I really appreciated. Probably wouldn't have happened continually in those first few years without your support. And so anyone who wants to come to FMS, like, meet Morgan, everybody else, we'll all be there, get the industry together, do a lot of deals, see what's working in detail, and yeah, it should be fun.
Yeah. Yeah. And I'll say, I say this at the conference, like it's our best ROI of any dollar spent. And the ROI is not just like we learned this tip at the conference, but like still I'll have people that maybe I met at FMS several years ago. Eventually, you know, it's like there's not a fit then, but then 2 years, 3 years, 4 years later, something opens up, get a text, get a call. Hey, let's talk about this and see you have a deal come together. So I think just like investing in those relationships just opens up the opportunity. And even the, you know, like with VNR, that came through FMS. Like I met the VNR group with, you know, like Richard and Nicholas who were here. They came to FMS several times. Mark Breda was there.
Mm,
So it's like that would have, you know, maybe never happened, maybe would have happened, who knows? But like the fact that we met at FMS was like the initial launching point of
mm,
that. So really would encourage everyone. And it's good to be in person. Like we were just talking about like the online
yeah.
versus in-person stuff. Like anytime I have to travel now, like I dread it. But then every time I get back, I'm like, I'm glad glad I did that or went to that. So
Yeah.
it's awesome that it's now, I guess, 11th year or 12th. I don't,
Maybe the 11th. Yeah.
yeah, the 11th year is an awesome, you know, awesome accomplishment to be around through that. And hopefully the start of another boom, you know, boom cycle. Uh, as much as we learn in the bear cycle, it's time to have a
Yeah.
little easier path.
Yeah,
So,
for real. For real. Awesome. Thanks,
all right.
Morgan.
Thanks, John. All right. See ya.